Welcome back everybody to our series of accounting. Today we are looking at the trial balance. We are looking at the additional information. How can you edit the trial balance? How do you amend it? If you are given additional information, these might be errors or just information that just come at the end or the last day of the accounting period when our books have been done by the bookkeepers and we want to do the accounts, but we can't really exclude the information that we receive because most of them would be very much material. Okay, so as normal, I have my question on the board. We do have a trial balance and some additional information over there. I'll just go through our trial balance as quick as I can. Okay, so on our trial balance we have sales 120,000, purchases 65,000, capital 140,000, bank balance 130,000, creditors 45,000, debtors 30,000, stock 23,000, vehicles supposed to be 70,000 vehicles, 70,000 for vehicles, then loan 50,000, salaries 20,000, rates 17,000. So these are the items that we have on our trial balance, and as you can see, it's balancing at 355,000 both sides, the credit and the debit side. Then we move to additional information. We have additional information number 1 over there. Credit sales of 20,000 were never recorded in the books. Okay, the second, vehicles were depreciated at 20% using the straight line method. Number 3, goods worth 15,000 were received on the last day. Number 4, a loan of 40,000 was also received on the last day. Number 5, rates include 20,000. Rates include $2,000 which was prepaid for 2024. Okay, when we are preparing the trial balance, we use a similar heading as that of a balance sheet or as that of a statement of financial position, because in the trial balance we are listing the balances of all the accounts that we have. So what we do, we name it as trial balance is at 31 December 2023. So this is for the year ended 31 December 2023 on this date. Okay, so now let's try to look at how do we make adjustments to the trial balance. How do we make adjustments to the trial balance? Okay, let's look at the first statement on additional information. It says credit sales of 20,000 were never recorded into our books. Okay, so if we look at that, we can actually identify two accounts which are being affected by this statement. It includes sales because we made sales. Then another account which is being affected, we made these sales on credit, which means we gave our customers products but they did not pay. Okay, so this means that debtors are also affected. So the two accounts affected there, it's sales and debtors. So how were the sales affected? Let me just open a bracket here and see how we are going to do this. Okay, for sales we had 120,000. Okay, so those 120,000 were added by 20,000 credit sales. Okay, that's it. Then another account which is affected is the debtors. We need to complete double entry. Each statement, each additional information, each adjustment that you make, you are supposed to complete a double entry so that your accounts they balance. Okay, so what we are doing, the first entry, we have made the first entry on the sales. Then the second entry, to complete the double entry, we are going to do it on debtors. Okay, so the debtors, they were 30,000 already, so we increased them with 20. Sales also increased by 20, but to increase sale, we credit them by 20,000 because sales have a credit balance. To increase debtors, we debit them by 20,000 because debtors, they've got a debit balance. This is a debit side, this is the credit side. The debit side is always on your left and the credit side is always on your right. Moving on to the second statement, it says vehicle were depreciated at 20% using the straight line method. So what we go to our vehicles and calculate 20% of 70,000. This is the vehicle value, which is 70,000. 20% of 70,000 is 14,000. It means we are going to reduce 14,000 from that 17,000. But where is the 14,000 going for us to complete the double entry? Okay, the 14,000 is going to depreciation. Okay, so we are going to write depreciation here and write 14,000. Okay, now we move on to goods, to the third statement, which says goods worth 15,000 were received on the last day. Okay, now we are on the last day and we received goods worth 14,000. So what are we going to do? We have not paid for these goods because we just received them. So what it means is our creditors, or the people whom we owe, they are increasing. So what is going to happen is we are going to increase our creditors. We have 45,000 already for creditors. We are going to increase them with 15,000. Yes, 15,000 plus 15. But for us to complete the double entry, we need to see which other account is being affected. Which other account is being affected. Okay, so we received the goods, which means we are going to have an increased number for purchases. We had 65,000 for purchases, then we increased by 15. But now it is the end of the year. It is the end of the year and we received those purchases, but we have not sold these goods. It means we bought them, but they are going to be transferred into stock. It means we bought them, but they are going to remain without being sold. They are going to remain in the company. Okay, so we will take it again. We take this 15,000 again from the purchases and put it to stock. So at the end, there will be no impact on purchases because we made the purchase right at the end of the trading period. We are not going to sell anything of those goods. They are just going to be purchased, but immediately transferred into stock. Immediately they will be left as stock in the business. Okay, now we can move to the next statement, which says a loan of 40,000 was also received on the last day. Okay, this is the last day and we just received a loan. It means our bank was increased by 40,000, but also our loans were also increased by 40,000. So what it means is our bank, which had 130,000, will be increased by 40,000. Also our loan, which was 50,000, will be increased by an additional 40,000. Okay, now let's move to the statement which says rates include 2,000 which was prepaid for 2024. Okay, this trial balance. It was given as a 31 December 2023, which means these rates, they were paid for the next year. So what we do, we need to remove them from the rates of 2023 and make it clear that they were paid for 2024. So what we do, these rates were prepayments. We look here, we don't have prepayments on our board, so we'll put another account, prepaid rents, prepayments. Let me just write prepayments, which is 2,000. So we are going to deduct 2,000 from the rates. 17 minus 2. Okay, so this is it. These are the adjustments that we have to do when we are asked to amend the trial balance. These adjustments, they may come in a different way. They might just bring you the trial balance and the additional information and ask you to do the statement of comprehensive income or the statement of profit and loss, then proceed to do the balance sheet or the statement of financial position. What you need to do, you need to make these adjustments as you do the workings. I'm sure right now it has become so clear how do we do it, and if we've done all things correct, our trial balance is supposed to balance with the new figures. It's supposed to balance with the new figures if we've done things correct. So let's see how is our trial balance supposed to balance. Okay, the figure for purchases, the figure for sales, the first figure for sales, it was increased from 120 to 140. 120 plus 20, which gives us 140. So we are going to have 140 here. The figure for purchases, there was no impact on the figure of purchases because we added 65,000 plus 15,000 minus 15,000. So there was no impact on purchases. So we leave purchases like that. Then we move on. Capital, there was no impact on capital. Then we move to the bank account. The bank account had 130,000. The bank account, it had 130,000 and 40,000 was added, and this gives us 170,000 for the bank. $170,000 for the bank. Then we also move to creditors. They increased by 15,000. So there will be, the new figure will be 60,000. 45,000 plus 15,000, we get 60,000. Then we move to debtors. They also increased by 20,000. 30,000 plus 20,000 will give us 50,000. Now we move to stock. Stock was also increased by 15,000, which will give us 38,000. We also take a look at vehicles. the vehicle's balance was reduced by depreciation. 70,000 minus 14,000 will give us 56,000. So vehicles will have 56,000. Then the loan amount, it was added with 40,000, which will give us 90,000. Then we also look at rates. Rates were reduced by 2,000, so they will change to 15,000. Then the adjustments will be done. The adjustments are now done. Now let's check if our trial balance will balance now. Now that we have adjusted our items, let's try to check if our trial balance will balance. So we are supposed to add both sides, the right side and the left side, and try to see if it's going to balance. That side we have 140,000. We also have another 140. We have a 60,000. And we have a 90,000. This will give us 430,000. Just to cross check, this figure should equal to the total of this side. If it doesn't, there will be an error, and the error will need to be adjusted again. So this side we have 65,000, we have 170,000, we have 50,000, we have 38,000, we have 56,000, we have 20,000, we have 15,000, we have 14,000, we have 2,000. So this side also gives us 430,000. What this means is that we have adjusted our trial balance correctly. It means we have done the double entry in the right way. Okay, I guess this is a simple thing to do. You just need to practice this and watch it and repeat it and watch it and repeat it. In no time you'll be a pro. And once you know this, all the coming things in accounting will be very easy. Okay, thank you for now. Let's meet again in the next lesson.